Never in history have the people who control the silver market been this close to losing control. And the scary part? Most of the world still has no clue what's coming. In late 2025, precious metals analyst Ed Steer sat down for an interview that instantly sent shockwaves through the silver world. Not because he said something new, but because he said something nobody expected to hear out loud. According to Steer, the reason silver suddenly went vertical, ripping through the mid-70 seconds, blowing past previous highs and making 10% intraday swings look normal isn't random, isn't retail hype, and isn't some end-of-year quirk. He says it's something far bigger, something the banks hoped you'd never notice, and something that could make 2026 the most chaotic year silver has ever seen. In this video, we're breaking down exactly what he said, why it matters, and how close we might be to a full-blown silver panic. And trust me, the deeper you go into this story, the stranger it gets. The parabolic move nobody saw coming. Silver didn't just go up in late 2025, it detonated. 1 week it was consolidating in the mid-30s. The next thing you know, it's melting faces in the mid-70s with monster candles you'd expect from a meme stock, not a 5,000-year-old monetary metal. And here's the thing. This move didn't behave like regular buying. Steer believes the main fuel wasn't demand, it was panic. Not from traders, not from Reddit, not from retail, but from the banks themselves. He points to COMEX bank participation data, which showed U.S. bullion banks sliding from roughly 29,000 contracts net short earlier in 2025 to slightly net long. Read that again. Tens of thousands of shorts covered. Into rising prices? That's not a trend. That's a fire alarm. To Steer, this is the first flash of something he and the late Ted Butler warned about for years, a moment when the people who've been suppressing the silver price are suddenly forced to unwind. And when they unwind, they don't unwind slowly. They get dragged. The price-managed market that finally broke. Here's Steer's core argument. For decades, silver has been held down by a handful of giant players, mostly U.S. banks, who sell paper silver on the futures market to manage price. This only works as long as inventories are deep. New supply is steady. Shorts aren't under stress. But now Steer says all three have flipped. Number one, the 6-year structural deficit. Silver has been in a deficit, meaning the world uses more silver than it mines for roughly 6 straight years. And not a tiny deficit either. We're talking about hundreds of millions of ounces. Inventories in London? Falling. COMEX registered? Falling. Industrial demand? Solar? Chips? EVs? Exploding. Steer says the above-ground silver that banks can quietly dump into the market has dried up. And once physical supply tightened, the whole price suppression system hit a wall. Number two, the brick wall moment. He describes this moment like a car rushing toward a concrete barrier. For years, banks controlled the steering. Now the wheel is locked, the brakes don't work, and the wall is getting closer. When physical metal stops showing up, when industrial users start complaining, when traders begin asking questions, the banks can't just paper over the problem with another giant short position. The system simply can't absorb it anymore. So instead, they cover, and that's the domino that starts the chain reaction. The bonfire of the silver shorts. Ted Butler called this years ago a moment when the biggest shorts in the world would be trapped. Steer says we are living through the opening scene of that event right now. Here's why. Open interest around 150,000 plus contracts. Open interest is basically the total number of active futures contracts. For silver, the number was sitting around 150,000 plus. That means tens of thousands of longs, tens of thousands of shorts. Every dollar up equals massive pain for shorts. When silver jumps 10% in a day, shorts don't just lose money. They get slapped with margin calls that feel like a truck hit them. And if they can't pay, they get liquidated. Steer brings up a brutal example. The collapse of Bear Stearns in 2008. Most people remember that as a subprime story. But Steer and Butler argue the real trigger was a giant margin call on their gold and silver shorts billions of dollars they simply couldn't meet. If that happened to one bank back then, what happens if multiple banks get hit today, especially when silver is moving faster than ever? You start seeing why Steer calls this a panic. Could silver really go to $1,000 or more? The interviewer asked Steer about Lynette Zhang's bold scenario, the idea that silver could hit four-digit prices. Steer didn't laugh it off. He didn't say it was impossible. He said something far more unsettling. If the banks stop shorting and the longs start bidding against each other, prices could reach unimaginable levels before new shorts show up. Translation: if the people who've been sitting on the lid suddenly take their hand off, this whole thing could blow higher than anyone expects. But there's a problem. High prices don't happen in a vacuum. They have victims. Three-digit silver equals systemic damage. Steer believes even three-digit silver could bankrupt multiple trading houses and banks. The leverage behind these contracts is huge. A $10 move can wipe out firms. A $100 move could wipe out whole segments of Wall Street. And this creates the nightmare scenario. If shorts keep shorting, they get destroyed. If they stop shorting, they also get destroyed. That's what Steer calls a lose-lose. And lose-lose situations tend to end suddenly and violently. China's silver export controls, the wild card. Now here's where the story takes a geopolitical turn. Starting January 1st, 2026, China announced that any company exporting silver must apply for a government license. On paper, that sounds like paperwork. In reality, it's a lever Beijing can pull anytime it wants. China controls roughly 60 to 70% of the world's traded silver flow. If even a fraction of exporters fail to qualify, and Steer says many won't, global supply shrinks instantly. He compares this to earlier Chinese moves with rare earths, graphite, and other strategic materials. Every time China pulls this lever, prices go vertical. Imagine silver already in deficit, already under squeeze pressure, now getting hit with an export choke. That's not bullish. That's gasoline on a bonfire. Steer believes governments will soon realize silver isn't just a metal. It's a strategic resource. And once governments get involved, the market doesn't behave like a market anymore. It behaves like a scramble. Industrial users, from calm to panic. One of the most interesting parts of the interview came when Elon Musk hopped into the conversation on X and said a major silver spike would be bad for industry. Steer thinks corporate America realizes this too. Maybe not publicly, not yet, but behind the scenes. He sees three things happening. 1. Companies building private stockpiles. If you need silver to make your products solar, EVs, chips, and the price is shooting up, you don't wait. You grab what you can. 2. Corporations going long on COMEX. Steer believes we may see industrial users hedge by going long. If a few mega firms do that at the same time, that's the spark for a runaway squeeze. 3. Companies buying stakes in mines. Steer says this is where things get crazy. Instead of buying silver, companies might buy the source. This is what he calls the panic phase, when the fight isn't about price anymore, but availability. He even makes a wild but mathematically simple point. Silver, going from $70 to $700, barely moves the cost of most electronics. It's not the price that kills production. It's the shortage. That's when the panic really hits. What inning are we in? Steer uses a baseball analogy. Some people think silver is in the 8th inning, minutes away from the final blow-off top. Steer says no. He believes we're in the 2nd inning. If that's true, imagine what the 3rd, 4th, and 5th innings look like, especially if the pace accelerates. He gives 3 reasons he thinks we're still early. 1. Silver is up 135 to 140% in a year, yet still ignored. If any tech stock did that, CNBC would camp outside the CEO's house. But silver? Crickets. 2. Retail isn't in yet. You know the mania phase hasn't begun because your cousin who bought Dogecoin in 2021 isn't bragging about silver on Instagram. 3. Governments and megacorps haven't started fighting over mine assets. When that happens, and Steer thinks it will, that's when headlines turn insane. By Steer's view, what we just saw in 2025 isn't the top, it's the spark. Conclusion. Ed Steer's warning is simple. Everything that could push silver higher, short covering, a global deficit, shrinking inventories, explosive industrial demand, and now Chinese export controls is hitting at the same time. Silver didn't go parabolic because the market is crazy. Silver went parabolic because the people who've kept the price down are losing control. And if he's right, then the panic of 2026 isn't the end of the story. It's the opening chapter. If you have insights or questions on today's analysis, leave them in the comments. Your input helps shape the direction of this channel. And if you want to stay ahead of the major moves in the metal markets, make sure you like the video, subscribe, and turn on notifications so you never miss a critical update. See you next time.